If silver is going back to $40, this has to happen first. Calm, steady, unhurried delivery. Then something specific has to change first. Not opinions, not sentiment, not headlines. Structure, because prices don't fall in a vacuum, and physical markets don't adjust independently. That's what this video is about. Why this question matters right now. Over the past week, silver prices have been extremely volatile. There's growing talk that silver could fall much further, into the 50s, maybe even the 40s. That's possible, but if that's going to happen in a real way, not just on a screen, then the physical side of the market has to respond. And so far it hasn't. The contradiction people are missing. Here's what we're seeing at the same time. Inventories in China continue to drain. Western vaults are not rebuilding, yet the Shanghai silver premium is falling. In a simple supply and demand model, that doesn't make sense. If silver were becoming genuinely plentiful, inventories should stabilize or rise. If premiums fall, vaults should refill. That's not happening. So let's explain why this can occur temporarily and why it can't persist indefinitely. First misconception. The Shanghai premium is a stress gauge. Many people assume this. Shanghai premium equals immediate physical tightness. That's incorrect. The Shanghai premium is a clearing signal, not a stress gauge. It tells you how aggressively buyers are bidding right now, not how much silver is already being consumed. That distinction is critical. How inventories can drain without rising premiums. Silver can leave warehouses through consumption, not just through panic buying. That looks like this. Fabricators pull metal from stock. Existing inventory gets used. Replacement metal is delayed. No bidding war required. Inventories fall quietly, while premiums remain muted. This is usage, not excitement, and usage drains metal just as effectively. Why falling prices don't immediately bring buyers back. Now add volatility. Sharp price drops don't always attract buyers. Sometimes they make buyers wait. When silver becomes unstable, marginal demand pauses. Buyers hesitate. Bidding pressure cools. So what happens? Metal keeps leaving the system. Premiums soften. Price signals weaken, even though availability hasn't improved. That's uncomfortable and important. Paper price versus physical adjustment. This is the key split. Paper markets reprice instantly. Physical markets adjust with friction. When volatility spikes, futures markets clear risk. Physical markets clear availability. Those processes don't have to agree in the short term. Price can fall faster than physical supply can respond. That's how you get lower prices, without inventory relief. What about the dollar? Yes, a stronger dollar can reduce urgency, slow premium expansion, encourage patience, but it does not refill vaults. Currency strength can suppress signals. It cannot create silver. That's the Rubik's Cube constraint. You can't twist one side of this system without something else eventually moving. So what must happen for silver to truly fall to $40? If silver is going back to $40 in a real sense, not just on paper, then at least one of these must occur. Inventories rebuild, demand meaningfully weakens, or premiums stay low while vaults refill. So far, none of those conditions are being met. Instead, we've seen ongoing inventory depletion, high price volatility, incomplete physical relief. That tells us price weakness alone is not resolving the problem. The core takeaway: this doesn't tell us where silver goes tomorrow. It tells us something more important. The longer this persists, the less useful price pullbacks become as a relief mechanism. Price can fall, but without physical adjustment, that fall remains incomplete. One important clarification: this is not saying Shanghai premiums are wrong. It's saying Shanghai premiums are incomplete during volatile phases. Silver isn't resolved yet, and this isn't a one-day conclusion. This is a structural condition, and it only matters if it persists. That's why we watch inventories, premiums, and price behavior every day. We track this daily on Silver Forecast, Morning Signal. You can find us there each morning.